Welcome to Second Take, the show that focuses on the issues behind the news. In early December, the gold price hit a record high of over $1,225 an ounce, which is good news for dollar investors, but bad news for South African miners. Mining Weekly editor Martin Creamer is with me in the studio today to tell us more about the highs and lows of the gold price in 2009 and what we can expect in 2010. Welcome to the show, Martin.
Thanks, Shannon.
Can you tell us why a high gold price is not favourable for South African gold miners?
Well, it's all about currency. And when you walk down the street, people say to you, gee, it's good to be in gold. Look at the record prices we're seeing in dollars. But when you translate those into local currencies, and it's not only in rands, but also Canadian dollars and Australian dollars, that's where the hardship arises because the dollar has been weakening. And with a weakening dollar, the gold price has been rising in dollar terms. But because the local currencies have been strengthening, like the rand, in reality, the price hasn't gone up as attractively as people think. And, there's still a situation in local mines where people are having to come to terms with this and sometimes having to cut back.
Can you tell us a bit more about the ups and downs of the gold price in 2009 and what it means for South African investors?
People were so optimistic about the gold price. We had a lot of gold bulls coming out early in the year. And even the conservative gold bulls were saying to you, well, they think we'll work conservatively and say before the end of 2009, you'll see the gold price rise to $1,200 an ounce. And there was one of them I can distinctly remember saying that, and many others went beyond that because they were far more bullish and the gold price was still in the $900 an ounce position. Well, we're heading towards Christmas. And the gold price, as we can see, isn't at that $1,200 an ounce. So even in dollar terms, it hasn't been the dripping roast that people anticipated early on in the year in that, bad news would stimulate a very good gold price. And we're still seeing it getting close to 1,200. So they weren't that far off in dollar terms. But locally, as I say, we've also had a rand strengthening that has not brought home the bacon.
So what price do you think we can expect to see in 2010, and what will this mean for the mines?
Unfortunately, gold thrives on bad news. So if there is bad news, we could see a very high gold price. The American Federal Reserve is still not too happy about the recovery situation, and they're still saying that the unemployment levels in the United States are going to be with them for a long time. So against that background, people are still bullish about gold, but it's a sort of a long wait that people are having. But to actually go into some sort of forecast, I think would be to fall into a trap at the moment because, the global economy situation is still not clear. Visibility is not that hot.
Which gold mining companies do you think, in your opinion, we should watch out for in 2010? And how will the talk of nationalisation, if any, have any effect on those gold mines?
Yeah, the three top gold mines that are always worth looking at are, Anglo Gold Ashanti in South Africa and Goldfields and Harmony within the country and on the Johannesburg Stock Exchange. Outside the country on the London Stock Exchange, Rand Gold Resources has been doing very well, but we can see the smaller companies locally, having to, one of them going into judicial management with an underground mine. There's supposed to be a very good gold price and they're going into judicial management. And others closing shafts and closing smaller operations. And that sort of puts a different hue on the prospect of nationalisation because, I don't think it's a great thing for the state to look at gold as a prospect for nationalisation in South Africa. A lot of the mines are depleted, they're deep. So, the expectation, I think, from the normal citizens would be, gee, we're going to nationalise these gold mines and make a lot of money. I think they'd find they'd have to be pouring a lot of money into those gold mines and it would be a big disappointment. I think nationalisation might be a prospect with new platinum mines and in the platinum arena. And we see that this nationalisation debate just won't go away. And it's not only Julius Malema. I mean, today, we hear people like Patrice Motsepe coming out. Now, he's one of the most powerful black South African leaders, a person who has actually done very well out of the mining industry in South Africa as an individual. And I know at one stage the Young Communist Party said, well, he should be nationalized as a person. But, speaking in Limpopo, maybe close to where Julius Malema's constituency is, he made the point that if the nationalization of South Africa's mines are going to be good for South Africa, he's all for it. So that takes the debate to a different level, and it's going to be interesting to see where it ends up.
Interesting things to watch out for in 2010. Thank you very much for your time, Martin.
Great pleasure, Shannon.
That's the show for today. Join us again next time for more news and insights into what's happening in the mining world.